Hi, Jonathan York, Bay Financial Partners, looking at the investment markets. Pretty interesting comments coming out of the Jackson Hole meeting with Fed Chairperson Yellen, now sort of indicating that certainly the US Fed is looking at increasing rates, and there will be a rate increase now, more than likely before the year end. That obviously puts the September meeting now very much a live meeting, but it is still very much data dependent. Just to put that in percentages, percentages jumped for a Fed rate hike at the September meeting up to around sort of low 40s from sort of low 20s. They say that is data dependent, and now the non-farm payrolls coming out this Friday will be very important. So if that's another strong number around sort of 180, 190, then certainly it does open the way for a rate hike in September. And if you don't see it in September, then certainly November or December, certainly expect to see that rate hike. Also talk as well about what the new normal will be in terms of a neutral rate. It's probably lower than first anticipated, probably around sort of 3%. Current sort of Fed funds target rate is sort of 0.25 to 0.5. So what they've done now, again, they sort of eased the market into the expectations that there is a rate hike coming, and now it's just a question the Fed have to deliver. The only issue with this is that if they don't deliver, they potentially lose a little bit of credibility. But as discussed before, the Fed really do need to get back on track here. The US economy is growing at a pretty good rate. Unemployment below 5%. Most people would argue that's full employment, and certainly interest rates do need to be higher than current levels. Obviously, implications for the rest of the world are pretty sort of major there. You would expect the US dollar to strengthen on the back of that. Although really probably 1/4 point hike doesn't really do too much for the dollar. It will just be interesting to see the accompanying sort of rhetoric that comes with it. And if you're then looking for 2 or 3 hikes next year, that probably does set the dollar on a little bit of a bull market. Interesting news coming out of Europe as well with the ruling against the Apple tax case. Reported they've got to pay about $14 billion. Apple has about $230 billion, so it's not really the issue of the cash. It's just the ruling, and again, the EU coming out and sort of having a pretty heavy-handed instance on things that probably don't really concern them. Potentially what it could do is just drive investment away and also businesses away from Europe, and obviously in a time when they're looking to try and encourage a little bit of growth and could create some momentum going forward, it's possibly not really the sort of signals you want to be sending to companies who are possibly looking at sort of opening up operations in Europe. Here in New Zealand, Spark have a 10-year bond in the marketplace. That interest rate is yet to be set, but it'll be set at a margin of 1.55 over the 10-year rate. So you're looking at probably around sort of 3.55, possibly a little bit higher. If you are interested in that, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. Discussed here many times, there are options out there, other options out there for compared to fixed interest. And if you're interested in discussing those options, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.